Can parents help you buy a property? Yes, they can, and in this video I'll give you 5 ways that they can help you do that. My name's Dan and I'm a qualified mortgage and protection advisor. This video is not advice, it's purely for educational purposes, and I must point out that your home may be repossessed if you don't keep up with the repayments on your mortgage. Now with that out of the way, on with the video. So, what are the 5 ways? First one, joint borrower, sole proprietor. Now what does that mean? It's where parents help you obtain a mortgage using their income. Something I must stress is you're all individually responsible for the payments. Not just you, also your parent or parents, okay? So if you stop paying, it can affect their credit history, okay? So it's imperative that if you get into financial difficulties, you speak with your parents because it can affect them and their future as well. Okay, and I cannot stress that enough. Gifted deposit. This is where your parents can give you a large sum of cash to put towards your property deposit. Now, don't get me wrong, a lot of people these days, they don't kind of have that level of cash lying around in savings accounts or wherever. But your parents could remortgage their property if they've got equity in it. It's just an idea. You'd need to speak to a mortgage professional, and so would they, because they are then putting themselves into further debt just to assist you. So that's really something you need to speak to a professional about. Third one, gifted equity. Now, this is becoming a little bit more common. Let me paint a scenario for you. You've got mum and dad and 2 children. They grew up in this 3 or 4 bed house and it's now worth 300,000. The 2 children are in their 20s. They've moved out. They're renting somewhere. They live with their partners. They've got their own little families going on. Mum and dad, the property's too big for them. So they could downsize. They could sell up and downsize. Or they could actually sell that property because it's a family home. They don't want to let it go to a stranger. So effectively they sell it to one of their children, but they sell it at a discounted price. And this is more common in a situation where, say one of the children's got a small deposit and their income will only support a mortgage up to say 250,000. So if the market value was 250,000, they'd be able to buy it, but where it's worth 300,000, the parents are effectively going to have to gift that 50,000 to their children. Now there are tax implications on this. I'm not a tax advisor, so you're going to need to get your parents and yourself to sit in front of a tax advisor to work out whether or not this would actually be beneficial or something that they would want to do. Fourth one, second residential. Now these are a little bit more difficult to come by, and the reason why I say this is your parents' income would effectively need to support running 2 properties, okay? If they've got a mortgage on their main property, to try and get a mortgage on a second property, their income needs to be pretty high. They need to demonstrate they can afford 2 lots of mortgages, 2 lots of council tax bills, 2 lots of gas and electricity, and that's quite an ask. If your parents' income does allow supporting 2 residential properties, then when your income allows, or you're able to save up a big enough deposit to buy off of them, you can either buy off of them using the gifted equity that I mentioned a minute ago, or you can buy off them for full market value. Fifth one, regulated buy-to-let. So this is like the second residential option, except for your parents are going to rent the property out to you, okay? So you'd have to come up with this agreement between yourself and your parents. Some parents will rent the property just purely to cover the mortgage payment. So if the mortgage payment's £300, they'll charge you rent for £300. Some parents may charge you more than that. They might actually want to be taking a little bit extra because they're going to effectively have a tax bill. So again, not a tax advisor. They're going to need to speak to a qualified tax advisor to work out whether or not this is a viable option for them. But you know, they might want you to actually pay a little bit over and above just to cover some of their tax. Also maintenance on the property. And then further down the line, they can sell you that property, again, maybe using the gifted equity option, or they can either rent it out to somebody else, or they can sell it and gift you some of the money from where the property value has gone up, so you can go and buy your own home. Something I must stress is you need to speak to a mortgage professional, and in some instances, a tax advisor. This is purely an educational video. This is not advice. a mortgage professional will be able to drill down into the finer details of those 5 options that I've given you. If I was to put it all into a video, it could take over an hour. So you must speak to a mortgage professional and also a tax advisor. Please put in the comments below, have you ever tried buying a property with your parents, and what was your experiences? I'd really like to know. So yeah, please put in the comments below. That'd be great to hear from you. If you want to watch a video on self-employed mortgages and how to get one, please watch this video. And if you want to watch a video on my opinions and why I dislike the Help to Buy scheme, please watch this video.